I could make a case that we blow right through fair value, we blow right through that 150, and things get really, really, really crazy because we saw that, right? We don't have to hypothesize, Scott. We know exactly what happens when you put $20 billion of demand into the Bitcoin ecosystem. 4 years ago, we saw that. We went from 10 to 60 in about 6 months.
I want to add another Bitcoin evangelist to the channel. Today I'm clipping Mark Yusko. Mark is the founder, chief investment officer, and managing director of Morgan Creek Capital Management. Morgan Creek specializes in pension funds, endowments, and wealthy individuals. Today we have Mark from a recent interview with Scott Melker. The full interview will be linked in the description. In this clip, Mark talks about future price, fair value, and how fair value and future price aren't the same thing. Just price and fair value in general are not the same thing. He also discusses the Bitcoin 4-year halving cycle. From my perspective, the way I think about Bitcoin is that 1 Bitcoin equals 1 Bitcoin. I really don't want fiat money. Enjoy the clip.
That could catapult Bitcoin up 410%, pretty big number, predicts hedge fund veteran Mark Yusko. That's you. Obviously, we're talking about the halving in the ETF, right? Because there's nothing else to talk about here.
Yeah, and it's so funny, right? Technically, I did say 150K, which is 410%, but that's not my base case. That was my blow off case. But Tom Lee came out yesterday and doubled down on his base case being 150K. But look, the math is simple to me, and I'm a math guy, so I like math, and I even have the hashtag just math, right? So the fair value of a network is very determinable. We've talked about this before. I can jot out a Metcalfe's law model, and I can come up with a fair value for any network, whether that's a computer network or telecommunications network or the Bitcoin network. And that fair value number has been very consistent over the years. It's got a little bit of wiggle around crises, but it's been pretty consistent. And today that number hangs out around 55K. I've talked to Tim Peterson, who I think has the best Metcalfe's law model at N Squared Crypto. And in a time like now where the price, which remember price is a liar, has nothing to do with the value of anything. It's just the price that two people will exchange a small amount. And the price today is hovering around that 29,000 level. That's materially less than 55. Well, then another thing happens. We're in crypto summer. What's crypto summer? It's just the period right before the halving. And then we go to crypto fall right after the halving. And what do those mean? Well, 4-year cycle. Why it's a 4-year cycle? Because it's baked into the code for the halving. And human beings go from greed to fear over these market cycles. Like in stocks, it used to run on about a 7-year cycle with the business cycle. Then the Fed kind of messed that up with QE, and now it's more like 11, 12-year cycle. But bottom line is cycles are human emotions, fear and greed. And when the price is below fair value, people like me accumulate. I'm an investor. I mean, people like me. I'm not saying that's smart or dumb. It's just I like buying things below fair value. I think that's a smart way to do things generally. And so investors will accumulate. Well, as we approach the halving, something happens. That fair value number is essentially going to double. Well, why is that? How can that be? Well, the halving is this ingenious construct that cuts the block rewards that are paid to the miners to secure the network. Well, if you think about it, the miners' costs are fixed. Electricity, power, electricity, and their machines. If the price didn't change and your block rewards get cut in half, you're basically out of business. So it inherently moves the price higher. And that's what we have seen every halving. And every halving between the 4-year cycle has added a zero. Went from 10 to 100, 100 to 1,000, 1,000 to 10,000. The last cycle, I think fair value jumps to 100,000, right post halving. But that's fair value. What we know about markets is they don't stay on fair value. They get way below when people are fearful, and they get way above when people are greedy. So as the investors get their fill of buying all the way up to that $100,000 level, then the traders come in. And traders don't give a crap, a technical term, about fair value. They just want movement. And they're going to buy and they're going to sell and they're going to trade. But then what happens is as the price starts to go parabolic, which it does because greed starts to enter in, then the speculators come. And then the gamblers come. Well, what's a gambler? Gambler, someone doesn't know anything about anything they're buying. They hear from somebody or read on some Twitter post, hey, this is a good stock. Or they watch Dave Portnoy pull tiles out of a Scrabble bag. Oh, I'm gonna buy that. Are you fucking kidding me? Oh, sorry. Are you serious? You're gonna buy something with real money because a guy pulled letters out of a Scrabble bag?
It worked.
And the problem is,
a very brief time.
It works for a few minutes, right? It works for a few seconds because a bunch of people do it. And the bigger your audience, the more manipulation you can do in the markets. And so GameStop and AMC and all that stuff with the Redditors or the Predators or whatever you want to call them, you can do that. And ultimately, Bitcoin, I think, will go to another speculative blow-off. And normally that blow-off has been about 2 times fair value. So in 18, we got to 20 on a fair value of 10. In 21, we got to 60 on a fair value of 30. And this time, I don't think we do double. Why? Well, because
the ETF should smash volatility to some degree, right?
Definitely. We'll talk about the ETF. And that's the wild card. It should smash volatility, but it could blow all my numbers and all Tom's numbers right out of the water.
We're going to watch Tom in a minute, but yeah, go ahead.
But the reason I don't think it does twice this time is there's not as much leverage. Most of the leverage has been dissipated because the SEC sued all the big leverage providers and made it really difficult for people to get 100x. Now, you should never buy an 80 vol asset with 100x leverage, right? That's just dumb. And I shouldn't throw my brother under the bus, but I think I've told you this before. He called me up and said, hey, they stole my Bitcoin. What are you talking about? Well, I was at BitMEX. I'm like, stop. No one stole your Bitcoin. You levered up an 80 vol asset. You got a margin call. You couldn't pay it, and they seized the collateral. That is not theft. Now, technically, people say, well, they lured people in to steal their Bitcoin. Like, well, that's certainly possible if that was their business model, but it's technically not theft. You signed the deal. But levering an 80 vol asset a little bit, fine. Like if it's below fair value, maybe fine. But levering it when it gets to fair value or above fair value.
I think I'm ready to have your brother on the show. We need to get him on here. You do it. Well, I want to hear his side of the story. We've thrown him under the bus so many times. No, just kidding.
We definitely don't want to hear his side of the story.
No, we don't want him. We don't want him. Take too long. Okay, perfect. Hey, let's see what Tom Lee had to say about the exact same topic really quickly, because we do have the video here.
I always like hearing your price targets because you are so fearless.
Fearless.
Where are you on Bitcoin by the end of next year, let's say?
Well, if the spot Bitcoin gets approved,
Yeah.
I think the demand will be greater than the daily supply of Bitcoin. And so the clearing price, this is done by Sean Farrell, who's our crypto digital strategist, is over 150,000. It could even be like 180,000.
But that's only if the spot, only if the ETF gets approved.
Yeah, and US,
this is a big F.
a spot US, because
Right.
a spot Bitcoin ETF is approved outside
Right.
the US.
Okay, but if it's not approved, then are we just lingering around 29,000?
There's still upside counts because of the halvening next year. So you'll have a drop in supply again. So the clearing price has to increase, but it won't be 6 figures.
It sounds like that aligns exactly with your thinking, right? Almost like you read your article.
Yeah. well, Tom and I are brothers from other mothers. I mean, we definitely think alike. I do think it's funny though, and I love Melissa, and I am not criticizing her, but it's amazing to watch her be just as skeptical at 29K as she was with me when at 8K. She said, "What should you do?"
And what? Yeah,
like, buy it.
So true.
She said, "Like, what do you mean?" Well, you'd always say that. Yeah, I would. Buy it today, buy it tomorrow, buy it next week, buy it next month. Because it doesn't matter what price you pay. What matters is owning a piece of the greatest and most powerful computing platform the world has ever seen. That's what Bitcoin is. It is the most powerful computing network the world has ever seen. And it provides a function. It provides a better accounting system for the base layer of money than anything we've ever seen in history. And not to own that, I just think is imprudent. And what you pay for your share is kind of irrelevant because you're going to want to own this thing in perpetuity. So but I think it's really funny to watch her be just as skeptical at 29 as 4 or 5, wherever, 4.5 years ago when we were on together at 8.
Every single other metric about Bitcoin is showing that the fair value is much higher, right? I see even someone in the comments saying, listen, we're at 75% now of long-term coins being held and not moved, right? We see volumes historically low, coins being moved off exchanges. I think a lot of that is a lack of trust in exchanges. Yeah. But I mean, it's clear that people are holding this asset long-term, not moving it with the expectation that we are going to see another massive cycle up. And I think the ETF, which we should talk about, only contributes to that. I think that would be happening, by the way, without the ETF news, because I think that's just a general trend for Bitcoin.
The number of 55K is absent the ETF, right? The fair value of 55K, which is what we'll march toward by the halving, right? We'll march toward fair value. Then fair value will change on the halving event, and that pushes it to 100. So 100 has nothing to do with the ETF. Now, what the ETF has the potential to do, and I totally agree with Tom, it has the potential to really mess up the supply-demand dynamic because you're talking about a $550 billion asset, right? And so an ETF, when the ETF is approved, and I'll give it 50-50 chance on October 17th. So on October 16th, they will deny or push the Bitwise application the same way they pushed Kathy's application on Monday, right? And we're investors in both, right? We own a little piece of Amun and we own a little piece of Bitwise, and I wish both of them would get approved because the first one that gets approved gets everything.
Yep.
It's the victor takes the spoils. So I wish one of them would get approved, but it's not going to happen. BlackRock will get approved, and they're going to be first. So October 17th, they're third in line. Could they get approved on? Yeah, 50-50. More likely, they push them 90 days into 2024, and it gets approved either in January, or they might push it another 90 days and get it right around the halving.
Optics would be so crazy if they approve the day after rejecting Bitwise. So I agree with you that it probably likely gets pushed for that very reason.
Yeah. But look, those people don't care about how things look in optics. They're like, we are manipulating this process. We aren't going to do it the way it should be, which is whoever put in first should get it. We've decided the winner. We're the kingmaker, even though that's not their job actually. But let's talk about this. So you got a $550 billion asset. When the BlackRock ETF is approved, that basically opens up 30 trillion-ish. And this is from Eric Balkunas, who did the analysis, and I agree with him. 30 trillion of assets under advisors and RIAs that right now are prohibited from owning the asset. Like, I have a family harmony account at UBS. My brother-in-law's there, and I have some money with him. And I say, can I buy GBTC? No. UBS says no. Can I buy a mining company that does Bitcoin mining? No. So they don't let you do anything. Now, it's not as bad as I understood. Merrill actually wouldn't take you as a new account.
I heard the same, actually, anecdotally.
You made your money in crypto.
Yep.
It's like, are you kidding me? Anyway, so they'll take drug dealers and all kinds of other people, but they won't take Bitcoin. But pharmaceutical reps. Anyway, so 30 trillion, let's say you get 0.1%. Okay. That's not really aggressive. 0.1%. That's $30 billion. Well, Mark, 30 billion on 550 billion, that's not going to move the needle. Wait a minute. Remember, roughly 80 odd percent doesn't trade every day.
Yeah.
About 20% of the market cap. So let's call it 100 billion for round numbers. 100 billion trades every day. Okay, 30 on 100, that'll move the needle. But let's think about this. Is 0.1 reasonable? Like, if you're an RIA and you got clients clamoring to put, are you going to put 0.1 or are you going to put 1?
1%.
Are you going to do 1%? Yep.
You have to.
1%.
Otherwise, you have showing no conviction to your client in the thing that you're investing.
You're going to do 1%. And 300 billion on 100 billion of free float will rock the price. That will rock the price. And once the price starts to go parabolic, there's a self-perpetuating mechanism that the greed kicks in.
I mean, people always ask me, what's the catalyst for higher prices? Why would it go higher now? And I say, I don't know. The catalyst for higher prices is higher prices.
It's higher prices. It's the way it is. And it's always been the case. The catalyst for lower prices is low prices, or low prices, lower prices. So it is the nature of the beast. And so, look, I could make a case that we blow right through fair value. We blow right through that 150 and things get really, really, really crazy because we saw that, right? We don't have to hypothesize, Scott. We know exactly what happens when you put $20 billion of demand into the Bitcoin ecosystem. 4 years ago, we saw that. We went from 10 to 60 in about 6 months. Why? Because GBTC. Everyone forgets. We've seen this movie before. It wasn't as pure. An ETF is more pure. The money goes right in. With GBTC, a qualified purchaser had to buy the shares in the private market, wait 12 months, and then feed them, feed the ducks into the public market. But that asset went to $20 billion from zero. And it didn't happen over 6 months, but that parabolic part did. And that was 20 billion. Now the market cap was smaller, so it was about roughly the same percentage. And so look, it's funny when you talk about this topic, people are like, hope is not an investment strategy. You're just hoping because, it's down so much. Like, no, I'm just doing the math. Because when prices were 70,000, you didn't see me on your show or anybody else's show saying, this is really cheap. You should really be loading the truck up at this price. Because it wasn't. Fair value was 30,000, 33,000. The market cap, the price had gotten to 70K. That was stupid. Well, why was that stupid? It was because of gambling. There was too much leverage in the system. And then everybody's like, well, it became a speculative asset. Like, no, it didn't. It was the same asset it always was. Uncorrelated stocks, uncorrelated bonds. No. The correlation went to 1. Like, yes, that's what happens in liquidations. When you get a stock market crash and people get a margin call because their Netflix stock went down 70% and their, Amazon stock went down 55%. Let that sink in for a second. One of the largest companies in the world went down 55%. And you get a margin call. You don't sell Amazon. You sell Bitcoin or gold or cash or bonds. And so all the things that are liquid went down faster. And so the correlations do go to 1 momentarily. Now the correlations actually went negative for the first time a couple weeks ago. But on average, Bitcoin is 0.15 correlated to stocks, 0.0 correlated to bonds, and it's going to stay that way. It's the perfect diversifying asset. Not only should you have the 1% just because you should probably have 2 or 3 or 4% because it's the best diversifying asset I've ever seen.